Hey, Janet.
Hey, good news. By accessing some of your business term deposit, you could fix the ute.
This program is brought to you by CommBank. Support for your business.
Welcome back. Young Australians are trading shares in vast numbers, with many attracted to buying American tech stocks like Nvidia, Tesla and Apple. New data released by the online broker CommSec shows that nearly half of its 2.9 million users are under the age of 40. I spoke to James Fowle, the Executive General Manager of CommSec, earlier this week.
We've noticed a shift. About 60% of our new investors into the CommSec Pocket app are under 30 years of age. Now, that's a shift from our historic demographic. The CommSec Pocket's a simple investing app that lets customers come in with an investment as low as $50 a month and invest in one of 10 investment themes. So they don't have to know exactly what stocks they want to invest in, but they might be interested in tech stocks, for example. We've got one called Tech Savvy, and that gets them into an ETF that lets them invest in tech more generally.
Yeah, just talk to me about those young investors. Is that what they're really keen on, the sort of the ETFs, having equity spread out across a range of different assets?
Yeah, so what we find is less experienced investors tend to opt for ETFs. More experienced investors go into direct share investments. And obviously the younger investors are less experienced. So they are entering ETFs. And in particular, the tech stocks. But we also see young investors really interested in investing in the international markets. And if I look back over the last 6 months, in our international markets, the top 5 investments by value are all NASDAQ tech stocks, the ones you'd expect, Nvidia, Tesla, Apple, as well as one of the tech ETFs on NASDAQ as well. And at CommSec, we make it really easy for our customers to invest internationally. We relaunched our international investment platform about a year ago. And you can now invest in one of 13 countries across Asia, Europe, and of course the US.
And those young investors, I mean, how much money are they putting into shares?
It's really up to them. It's what they can afford. Obviously, cost of living has become a challenge in recent years. But because you can invest from as little as $50 a month, you can manage your investment. And we find a lot of young investors are coming in wanting to grow their financial freedom and to build a passive income for the future.
Obviously, as we record this, the share market in Australia is close to all-time record highs. Is that encouraging more people to get into the stocks at a time when the market is doing so well?
I think there's a lot of reasons that younger investors are getting into the market. One of which is, it's more difficult to get into property, so they're looking for a way to build their wealth, and investing is a way to do it. I think also it's much easier to get hold of information and education about investments than it used to be. CommSec, for example, we've got a number of educational channels. CommSec Invest, we've got a twice-a-day podcast where people can tune in and find out what's happening globally and how that might impact future investments. But also, we're on the channels where young people are. We've got a TikTok channel, we're on YouTube, and you can tune in there a couple of times a day, pick up sort of bite-sized investment information. We've got CommSec Learn flowing through those channels. And I think that access to information is giving younger investors a leg up and giving them more confidence to get into their first investment.
Yeah, what sort of engagement are you getting on platforms like TikTok?
Huge engagement. We've got an increasing number of followers. I was surprised when we came in to find out that TikTok was a place where CommSec are, but it's really popular and growing. And I think the success of the followership on TikTok, for example, is proof of that's where we need to be, where our investors are.
And how tough's the competition getting with other your competitors in the market? There's so many different ways you can invest your money these days online. I mean, how tough is it to try and stay ahead of that?
CommSec are a full-service brokerage. We've been around nearly 30 years, and we've focused on meeting our customers' needs. And I think that's what's let us grow to nearly 3 million customers. We're full-service in Australia. It's ETFs, equities, derivatives. We're on the 13 international markets as well. And because of our scale, that lets us invest in our platforms, keeping up with customer needs and making sure we stay up with, we keep meeting those needs. So we've just seen, pleasingly in the last quarter, our market share grew 2%, up to 44%. So we're very happy with the way that customers are approaching us and confident that we'll continue to meet their needs.
Yeah, you mentioned you've just launched a new app. I mean, how much work behind the scenes went on to get that to fruition?
Look, because of our scale, we've got the investment, so we've got our own teams that are working on our apps. The CommSec app just launched a new homepage, which is a whole fresh new look. You're able to see the progress of your portfolio over the last 6 months. And I think as long as we keep doing that, we will be able to keep investing and keep uplifting our customers' experience with us.
And what are some of the big global risks you might see at the moment that could affect investment trends over the next couple of years?
I think there's always been risk in investing, and there's been global events over the 30 years that CommSec have been around. What we see our customers doing is we're around to help them invest for the long term, so that they continue to grow their investments through all sorts of different global impacts. Obviously, things, geopolitical, elections, wars, that kind of thing, all have impacts on investments. And our customers are always trying to figure out what is that shift going to do, and what is that impact. The recent events in the Middle East have meant that the US dollar is stronger. That tends to depress commodities because they are denominated in dollars. But there's a lot of information, and what a lot of our customers do is they turn to our daily podcasts, where all of these events are discussed and debated, and try and figure out how that's going to impact their current and future investment strategies.
And have there been any really big trading days at any point this year?
Yes. So the 5th of September was our biggest trading day in about 2 years. The biggest since COVID times. And that followed a sell-off in the US. We saw US stock prices decline about 7% on the Friday before, which meant that when the ASX opened on the Monday, the ASX followed, and there was a lot of activity that day. On the 5th of September, we did sort of a double day, double the volumes that we'd normally do. And then on the Tuesday that followed, we probably did about 1.5 times the volumes that we'd normally do. So when there's volatility in the markets, there's a lot of trade. People either looking to sell at a high or buy in when it's low, trying to time their entry.
James Fowle, EGM CommSec, thanks so much for your time.
Thank you very much for having me.